Hello and welcome to another installment of Liberty Nation's Swamponomics videocast. I am Andrew Moran, Ellen's economics correspondent. Each week, I dive into the morass of top economic news stories, fish out compelling narratives, or I retrieve fallacies that have been accepted as conventional wisdom by the swamp creatures for years. This week, it's 2015 all over again. Donald Trump has announced his candidacy for president, Star Wars The Force Awakens disappoints, China uses its state-owned media to prop up the stock market. Recently, the China Securities Journal, a government-owned publication, posted a front-page editorial encouraging everyone to start buying stocks. The opinion piece told investors to be prepared for the, quote, wealth effects of the capital markets and the prospect for a, quote, healthy bull market. The propaganda, which was targeted at grannies and bellhops, turned out to be successful as everyone and their grandmothers logged into their wedge brokerage accounts and bought Chinese stocks, the good and the bad. Soon after the opinion piece was published, the stock market enjoyed a so-called melt-up Monday. In one day, Shanghai stocks rallied 6%, while other major indexes jumped to multi-year highs. By the end of the trading week, Chinese stocks skyrocketed more than 11%. Is China about to embark upon a new bull market or a bubble crash? Well, the last time China encouraged such a propaganda push was in 2015. At the time, the stock market was trending lower, and it wasn't until the state-run press published glowing articles about the stock market that ignited a year-long rally. But it was bad news for the grannies and college students who put all their money and life savings into equities since the stock market crashed about a year later. The problem with the overall Chinese economy is that the fundamentals do not support any rally or significant economic growth throughout the country. It is a Ponzi scheme economy that relies on new debt to cover old debt. Nothing is authentic about the paper tiger. Everything is a sham, filled with zombie companies that require perpetual bailouts to stay afloat. The red dragon's breath has been extinguished. If you thought the Federal Reserve was a dangerous institution, then you have not seen what the People's Bank of China has done since the fallout of the coronavirus pandemic. The PBOC has fiddled around with everything in the Chinese economy. The rediscount rates, the relending rates, the reserve requirement ratio, benchmark interest rates, repo markets, and the list goes on. It has managed everything to the smallest decimal, and of course, its money supply growth remains in the double digits. While the US has the Fed to juice financial markets, China has both the central bank and the state-run media to prop up the stock market. After a substantial rebound, will it crash in 2021? If so, it might be time for everyone to get drunk on some good old-fashioned Beiju. That's it for me this week. Please read my full column on libertynation.com, where I dive into the list of recipients of the PPP loans, including the Ayn Rand Institute, and the continuation of the retail apocalypse in 2020. Thank you very much.
Go deeper on the topic discussed in this video, head on over to one of these links here or go to our Liberty Nation Roku channel. Thanks so much for watching, and don't forget to subscribe and hit the notification bell for Liberty.